Day trading versus swing trading.
I need that money.
And welcome back, guys. I'm J. Rock Atchison, and in this video I'm going to be talking about day trading versus swing trading. And if you're new to my channel, I make educational videos for beginner day traders who want to learn how to grow their small account safely and realistically. So be sure to hit that subscribe button, turn on the post notifications so you don't want to miss out on cool videos just like this one. So without further ado, let's go ahead and get started. So the first one we're going to take a look at is day trading. All right, day trading involves buying and selling a position or multiple positions in a single day. Day traders typically close all open positions prior to the market closing. They work on shorter time frames such as the 1 minute, 5 minute, or 15-minute charts. Day traders typically work alone and use technical analysis and sophisticated charting systems. They often build custom stock scanners so they can search for potential trades throughout the day. Day trading is very attractive because of the huge profit potential on volatile stocks. Day traders compete with hedge funds and high-frequency traders on a daily basis. You just have to understand your style and your temperament, okay? And whether or not you can put up with the nuances with day trading and sitting in front of a computer screen all day. So day trading continued. If you're a beginner day trader, depending on the size of your account, you may be subject to the PDT rule. If you fund your US brokerage account with more than $25,000, this will not apply to you. Or if you seek a broker that's offshore, this also will not apply to you. With that being said, make sure you do your own due diligence before shifting your money off to an offshore brokerage account so you don't get caught up in anything crazy. All right. Considerations for beginners is to choose a strategy that works around your schedule and one that fits your personality. Maybe that's day trading, maybe that's swing trading, but you have to kind of test out, both, in my opinion, to see which one is for you. All right, and you can use a combination of the two. That's what floats your boat. By all means, you can use a combination of day trading and swing trading. So moving on. So let's talk about swing trading. Swing trading involves buying into a position and holding it overnight, a couple of days, a couple of weeks, and even a couple of months, depending on the setup and the potential for profit. All right. As opposed to day trading, swing trading involves working longer time frames such as the 1 day, weekly, monthly, and yearly charts in order to find trading opportunities. Swing trading attracts most beginners due to its flexibility, and then you don't have to sit and stare at the computer screen all day for hours on end as opposed to day trading. Swing trading may also provide a huge profit potential because of the longer time that stock has to play out. Okay. Also, one other thing to note, that swing trading may be a better option due to the reduced amount of stress that's associated with it. You can set it and forget it in most cases and just continue out the rest of your day, provided you've identified all of your entry points, your profit loss gains, and your worst case scenarios. You've already played all this stuff out in your head before you entered that trade. So the key to both day trading and swing trading is to manage your risk and understand who the market participants are, and understanding your trading style, your temperament, and protecting your capital. You have to think defense, think defense, 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 defense. So if you enjoyed this video, you want to see more videos just like this, be sure to hit that like button, hit that subscribe button, turn on your post notifications. Until next time, peace.